Pankaj Murarka, are you ready?
Good afternoon, Nikunj.
Just good afternoon. It's been such a great week. थोड़ा और आवाज में गर्मी होना चाहिए.
We are nearing towards the end of the year. It's been a phenomenal year for equities globally and for India as well. And now that we're ending on a very high note with the last of the sector which hadn't participated in this bull market for almost now 24 months has also started participating. So it's time to just calm down, absorb all that as all that we've gained and experienced.
I think we both know each other very well, right? I mean, you preempted my question before I could ask. You answered it. I just said good afternoon. You answered a question. Okay, what do you think I'll ask next now? A bit of, because we are talking about IT, so I'm sure we can play this AI game, right?
Absolutely, Nikunj.
Okay, so Pankaj, my point is, US slows down historically is bad news for IT, at least in the initial phase of the slowdown. IT companies are saying we are getting large orders, but it's not translating into reality. IT companies are saying AI is real. But the IT index per se in a year, like Anisha pointed out, there were guidance cut, there were more IT downgrades rather than upgrades. The index has given a 24% return. Why is that?
Well, I'll answer that question, Nikunj. But before that, let me just put across my view on one other thing you mentioned about US slowdown. See, I've said this on a few occasions earlier as well, that the current cycle that US and the world is witnessing is a cycle where it's an inflationary cycle where inflation is elevated. A slowdown in US economy, which is obviously the largest economy in the world, in an inflationary cycle, or a cycle of elevated inflation is very different than a deflationary cycle, which was the pre-COVID. So slowdown in an inflationary environment, unless it's a very deep recession, is not bad for the economy because the economy is, as it is, overrated. The fact is, US is the underlying economy in the US is extremely resilient. While the Fed is trying to slow down the economy, the fact is corporate profits and are extremely robust, and corporates are sitting on lifetime high cash on the balance sheet, and the underlying business is very robust. So coming back to the IT, I think. I think the underlying US economy, despite some slowdown, continues to remain very strong, and which is good for IT as a sector. Secondly, from whatever I read in my conversation with a lot of IT companies here and some global experts, people firmly believe that the evolution of AGI or AI, artificial intelligence, as we call it, the impact of that on IT industry and more broadly on the world as a whole will be as profound as it happened with internet way back in early 90s and mid 90s. So between then and now, we've had multiple IT waves, including enterprise wave or the digital wave or social media and analytics wave and all of that. But the upcoming AI wave in terms of adoption and implementation of AI solutions, and from an IT spend perspective, I think it will be significantly much bigger than any of these waves that you've seen in the last 3 decades. So I think it's a very profound and a defining moment for the IT industry and eventually for the world as a whole as well. And I think, which is what we've seen in US as well, some of these stocks which have performed really well in NASDAQ, including Microsoft and Nvidia, they are essentially, right, these companies are discounting earnings far out into the future.
Okay, so I'm going to ask a simple question. And a simple question perhaps for the benefit of our viewers. By and large, everyone's portfolio is neutral on IT. Either they are underweight or they are neutral. The market positioning, like banks, nobody is overweight. Nobody anticipated this kind of a move in IT this week or earlier also. For 2024, does it make sense to buy a basket of top 3-4 large IT stocks? Maybe it could be a combination of TCS and Infosys. It could be a Wipro or HCL Tech, depends on your understanding. But 10% allocation in top 4, would you make that as part of your portfolio for 2024 and beyond?
Absolutely. So I think it's a given that IT as a sector will outperform going into 2024. I have no doubt on that. And I think one will have to create one own portfolio in terms of creating a combination of large caps and some of the mid caps in the portfolio. But I certainly think IT as a sector will outperform. Companies, let's say Fortune 2000 companies had gone a bit slow in terms of their decision making, and they were deferring projects out of the same fears in terms of that would land into a recession because of rate hikes. Now that we are at the peak of the rate cycle and unlikely that US will slip into a recession, that decision making is coming back, and we'll see much more larger deals and spending, IT spends come back with very strong vigor, I think, in 2024, because companies will have to invest. And I think, as I said, this whole AI will drive a completely new wave of spending in IT budgets. And probably, I think this will be a wave which will continue for a decade. So it's going to be a very long drawn IT cycle this time around, my view, just like we had at the time of internet. And otherwise, all the intermittent waves in IT in terms of spends have been waves which have lasted for 2, 3, 5 years. But I think this AI wave will be a much, much more longer term wave, like we saw in the mid 90s or early 90s till the end of the decade, like internet. And as a result of which, I think IT companies in India across large cap, mid caps, if they execute well, if they have solutions around it, and if they build capabilities around AI, will see a huge amount of work flowing to them. And as I said, this whole wave of IT spends or elevated IT spends or resurgence in IT spends globally will sustain for this decade. That's my view or assumption, and which is why I think this is not one of those cyclical rallies in IT, but this is probably a change of trend, probably.
Change of trend, that's the word. And Pankaj Murarka, really appreciate your time. Thank you for joining us. Change of trend. Well, trend is your friend. Friend is your friend. Bhav Bhagwan.
Bhav Bhagwan che.
Bhav Bhagwan che. So that's what we are looking at right now. I can talk about banks, important, great earnings momentum, no NPAs, everybody likes it. But the bottom line is that at the beginning of the year, if you bought IT, you made 23% return. You bought banks,
correct,
row karke, kheech karke. If I take out last week's gain, then the return would be 7-8%. So Bhav Bhagwan che, right? I mean, IT is where the leadership is there.
Well, absolutely, yes, Nikunj. In fact, the charts for IT index, even the last 2 days when it's run up some 7%, 6% so far, but so at one point we may feel that it may look a bit more bullish or it's topping out. But the charts for the IT index, I think, is just showing a different ballgame altogether. So if you can go to the charts for the Nifty IT index and how the IT index has come out of a major consolidation, which was not the case with the banking index.
We'll start your pen. I think we'll do some handwriting practice.
Yeah, correct. So this is the charts for the Nifty IT index. Okay. This is 2022 mid. This was a point where the IT index was struggling. There was a lot of negativity. Okay. Since then, the IT index was going through a major correction, as you can see over here. And for the first time, we are seeing a breakout. Okay. So this is a classical breakout in the making for the Nifty IT index.
So give me a number. Now your Nifty number was 25,000.
Correct.
For 6 months. What could be the number for the IT index?
See, I'm not sure for 6 months, but I'm pretty certain that the previous high of 40,000, this should be taken out in the next 2 months.
Okay, so next 2 months, you feel it would be
40,000.
Above 40K. That's a fair assessment?
Correct.
Okay, now if that has to happen, what should one do? Buy TCS, buy Infosys, buy Wipro, buy CLTech, or buy all?
Yeah, I think you can buy the Nifty ITBs, you can buy the IT index, and I think it makes a lot of sense to have a good mix of large caps and mid caps, not tilted towards one segment, because in the mid cap IT stocks you will get that beta, in the large cap IT stocks you'll get that stability and safety.
Okay, now I'm going to write banks versus IT. Which one?
Tough one, if you ask me.
One. You have to give me one.
Currently I'll prefer IT index.
Okay. Good boy. Giving clear answers right now. High five for that. Very few people would actually say IT is the point. Correct. And very few people told us a week ago that market ke andar lamba trend hai. See guys, please remember, when you see a ferocious bull market like this, don't try to be cute. In a ferocious bull market like this, like Samir bhai said, just take a chill pill. Like Kunal has been maintaining, it's important to be in the ring. You don't want to, come on a Monday and take a Tuesday off and then, come on a Wednesday. Kunal feels that between IT and the banks is where all the excitement is. IT index could give a better return. And you never know. I mean, price is something what is telling you that IT in a sense has given you decent returns. So let's take a break. When we come back, queries and more queries with Sanjeev Bhasi. Well, let's take our review query section and Sanjeev Bhasin. Good afternoon, sir. Can you hear me, Bhasin Saab?
Yes, Nikunj, good afternoon, sir.
Sir, our Friday afternoon, I would say TGIF. Thank God it's Friday. Looking at how markets have moved, everybody is saying why it's a Friday. 2 दिन market बंद रहेगा.
Bilkul, we should have the market open on the weekend also, given the tezi.
That's the spirit. So you are a big voter if market hours are extended right now, right? Right now, no broker would complain.
Right now, no one, but keep a equal life work balance. I think this is just fine what is going on, and don't get carried away by the momentum, but participate. So when did you see State Bank lead the market charge and so on? And it is evident that IT, which was the most downgraded sector, has been such a startling outperformer, Nikunj. So the markets change at a dime. You have to be invested. You have to watch ET now if you want to make money.
I must frankly share with you that when you recommended our viewers to buy JP, TTML, even stocks like Suzlon, I just thought that they're too risky, but they've done very well. What gave you the conviction? I mean, I'm asking you on the record just to understand that. I mean, just been a great call. I mean, I perhaps was slightly on the conservative side. I thought there's a lot of debt in them, but you still, you stuck your neck out and you maintained your view. What gave you that conviction?
Also, if you take on record, if you recall, last 2 years I've been saying NBCC at 35 and the GMR at 30 rupees. And even though there was debt, the underlying businesses were very strong. And Nikunj, sometimes you have to weigh the pros and cons of market cap. JP still has a 5 million ton capacity of cement. They have already got a waiver on the NCLT from ICICI of not being an LCLT case. The assets on hand are close to 45,000. I can agree that there is a debt discharge, but that has been put on the SPV, and the other net debt today would be less than 6,000 crore. How can the market cap be at 1,500 or 2,000 crore? Same was the case with Suzlon. There was a total change of guard, and the underlying business, given that energy was forming a very big base in alternate energies, you saw that stock come back. Same was the case with Vodafone. If Government of India has taken 33% stake at 10 rupees and converted into interest, the company had never ever defaulted on any bank. So there was a lot of room of comfort, and that is what happens in a bull market. There are certain stocks or sectors which are hated but can turn out to be the darlings, particularly in view the defense, railways, and the PSU banks and gas stocks.
Let's start our segment now, sir. We've got our first question coming from Mr. NG Prasad from Andhra Pradesh. Mr. Prasad, thank you very much for watching the channel and thank you for sending this query. He holds 2,000 shares of Tata Steel and it is a long-term bet. Should he switch to JSW Steel? And Basinsa, why not? I mean, think about it. JSW Steel is a better cost producer. There is no, if I may use the Hindi word, jhanjat of Europe. There is no chorus baggage for them. Their efficiency is much better, and now they have the advantage of port, which also has kicked in.
Correct, but I would still say keep half of your Tata Steel. 3 things. Tata Steel is the lowest cost steel producer, not in India, in the world. They have captive iron core, they have captive coal mines, and their synergies are superb. Yes, the debt overhang is there, but they have serviced the debt from 40 to 83 on the chorus side. And I think now they are in a very, very sweet spot because autos across the world, particularly Europe, have picked up. Chorus makes specialized steel, which is 3 times the price of normal and mostly used in autos. So I think Tata Steel is going to go to 150 or the previous high, and that is where he can look out and book into JSW Steel.
This is in a sense which we are perhaps getting on a daily basis. One day it's HDFC, second day it's Kotak. We got Fayaz from Mangaluru. He wants to know your advice on Kotak Mahindra Bank and where do you think the stock could move in next 12 months? And Pasinsa, before you answer that, let's look at the Kotak chart actually. The decadal change and the 3-year change. Now that's Kotak Mahindra Bank for you. It's hugging on to a flat line. 1 saal mein paisa nahi bana, to put it very simple. Why? Expensive valuations, FI selling, transition, new CEO comes in. So there are a lot of changes happening there. Last 3 years, it has given no returns. 3 saal se no returns. Last 10 years, however, 3 saal mein return nahi hai, then last 10 years, has it given returns? Hold your breath. Hold your breath. It'll just come up on your screen and this is where the surprise would come in. The CAGR return in Kotak Bank in last 10 years, it's still 4x despite the fact that it has not given 3 years of return. Sanjay Saab, like they say, hota hai stock market mein. 3 years return nahi hai, but next 3 will be get returns.
Bilkul, Nikunj, you have to stay patient. This is one of the best private run banks. After the Karur Vysya takeover, this has expanded. And secondly, the pedigree is the AMC, the broking, the life insurance, all come into the bank. I think some of parts, it was an expensive bank and remain, but it is a very, very pedigree stock to own. Now, business is pedigree to own. It can underperform for some time for whatever reason. There is a high beta outperformance in PSUs and so on. But this is a consistent performer and a wealth creator. I have no two ways. As a disclosure, we have made some very, very niche clients get into Kotak closer to 1700. We think that if we get another opportunity, we will add. But we want to stay with pedigree stocks. And that gives us the presence in the market with a little defensive background.
In markets, if the business is growing, stocks will catch up. There are times when stocks do nothing. It is said by Buffett that 80% of the gains in the stock market are made in 30% of the holding period. So I guess right now that holding period in the template would be tested. As long as the management bank is growing, the risk is under control, the change of guard which markets would be watching out for after Mr. Kotak's exit. Those are variable factors which are at play. But I think 3-year consolidation for a stock which was trading at a price to book of 6 is now suddenly dropped to levels which are even pre-ILNFS. So that's like the margin of safety which Bhasin Saab just spoke about. So keep the faith in Kotak Mahindra Bank. Franchise like these are rarely created, and this is one of the finest run bank in the world. I can say that with a lot of certainty. That's it on this edition of Tracking Trends with me, Nikunj Dalmia. Thank you for tuning in. Last hour of trade for the day and for the week is what we'll capture right after this break.